Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you a little earlier than usual, the 8 o'clock start mark, coming to you starting at 7:30, given, of course, the developments overnight. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, as always, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning, folks. It feels like we never left work, right? Because the news started trickling in around 7 o'clock our time last evening, as soon as most of us had just reached home. And then there was no looking back. So it's happened, guys. 25 plus 25 equals 50 now.
Well, indeed. So let's get straight to the action.
I mean, it's bizarre, right? I mean, absolutely bizarre. Theatre of bizarre, but that is what it is, right? That's essentially the point. Actually, I don't have very many points to make today because, I mean, we're not going to look through the US action, etc. I think what we're going to look through is, of course, this 50% tariffs, and actually, that is the right phrasing, right? I mean, I think one should try and look through this 50% tariff. So the news first, right? Tariffs on India rise to 50%, 25% additional. So earlier 25 and now 25. But the implementation has been delayed by 21 days. That is important. I mean, it's very possible, and it's happened before, that executive orders starting 12 tonight, right? That's not happened. There's a 21-day delay. And by the way, it's not even 21. There is, of course, 27th of August. And then there is the final effective date is 17th of September. So there is time which has been put on the table, and it gives both sides time to negotiate. Gives time for India, the Indian side, to negotiate this lower as well. Now, lots of people out there wondering what is the impact on, how much should we take down earnings impact. Actually, from a stock market perspective, the earnings impact is not all that large in terms of exposure, etc. in any case. But even, sectorally speaking, textiles, chemicals, gems and jewelry, etc., etc. We know the top exporting products out of India into the US, but there's no real sense of trying to microanalyze sector by sector or company by company implication of this 50% tariff, because at 50%, I don't think anything out of India into the US is really commercially viable. There is the question of relative competitiveness. So at 25, you are higher than a lot of the peers around India. But you could have sort of figured something, right? Somebody's at 20, 21, 22, you're at 25. But at 50, there is no question. So virtually all exports to the US at that rate are uncompetitive, are not viable, really. So it's not a tariff. It's almost like a trade embargo. So, and that's the reason why I'm saying that little point looking at this in terms of company by company or sector by sector in that sense, and trying to fine-tune expectations or estimates. I would say a lot can happen, and I think a lot will happen in the next 21 days or so. And if I were a betting man, I would say there's zero chance, or near zero at least, that this 50% tariff essentially is the permanent rate which you will see. Most likely, of course, we don't know how and what shape, form, what will be the give and take, etc. But most likely that 50% tariff rate will be brought lower to a much more reasonable kind of level. What can change? One of the things, I'm not going into any detail, but this just happened. I'm just mentioning this because this came last night. US and Russia. This additional 25% is because the US says, and absolutely wrongly so, that India buying oil essentially is financing the war, Russia's war in Ukraine. Well, Trump said that US and Russia, by the way, US and Russia had a long meeting yesterday. And apparently Trump may be meeting with both Putin and Zelensky next week to try and figure out whether they can stop fighting with each other, to figure out a ceasefire. So if that happens, the basic underlying reason why the tariff has been put, this additional 25% kind of disappears. But, I'm not saying this doesn't sour sentiment. Sure, it does sour sentiment at the margin, and there'll be, FIs, for example, have already sold about $10 billion in India this year so far. The rest of the region has done far better, YTD as compared to most global markets, etc. And this will, spark fears about more outflows and things like that. But even there, I would say, since this 25%, was really well advertised, right? I mean, President Trump promised that there is going to be something big and it's going to come in 24 hours, and it's come. So, I mean, promises made, and in that sense, unfortunately, promise delivered. So it's well advertised. You look at what the rupee 1 month, NDF has done last night. Not moved very much, 87.85. It briefly went to about 87.95 immediately after the headlines came out yesterday evening. I think the GIFT Nifty will give you a sense of how we're likely to start. And I don't think there is a very large cut even there, about 58, 60 odd points lower start. I just put out some levels for you, and then we'll sort of move on. For the Nifty and for the Nifty Bank as well, 24,450, 24,500 first support is very near term. And if that goes, 23,800, 23,900 is the zone where the Nifty has found resistance multiple times over the last few quarters actually. So that becomes the next level. And for the Nifty Bank, similar levels will come in. 54,956, and then if that breaks, 53,500. I just say one thing. I mean, if you're trying to, are you really going to change your portfolio construct because what has happened? Because this 50% is not going to be permanent. Near zero chance, as I said. But if you're trading, it's a different aspect. And there, I think you need to deleverage very, very quickly because there'll be lots of news flow back and forth over the next many weeks. In these 21 days, and it's almost impossible to really figure out which way this is going to go. So more often than not, I mean, in situations like this, in these very turbulent kind of times, you will get hurt. So trading is a different matter, but if you're in the market investing for the long term, I don't think this really should make you change, how you're thinking about what your portfolio should deliver in the long term. Surabhi.
Absolutely. But big headlines overnight. But the sense also is that this is not about the direct impact, which is 2% of GDP, as we've been saying that. And even lesser, if you look at the market capitalization of sectors like gems and jewelry or textile is very, very minuscule in the Indian market. But sentiment, second-order effects, that's what the worry seems to be all about. Anyway, just very quickly to round up the rest of the global market action as well. US markets again had a great session yesterday. They were flying higher. The Nasdaq was leading the charge with a gain of about 1.2%. By the way, President Trump announced this 25% additional tariff on India. Then he announced a 100% tariff on any semiconductor or chip imports that are coming into the US. And he's making good on all his threats. And yesterday, we also had Apple announcing an additional $100 billion investment into the US, in addition to the numbers, like they've spoken about $300 billion in the past as well in February this year. So they're topping that up. Basically, everyone's towing the line, except India, it seems, so far, when we haven't done that at least as yet. So it just tells you how these things are playing out. Week to date, the rip-roaring rally in the US has been so strong despite that weak jobs report. Look at the numbers week to date. The S&P 500 almost 2%, the Nasdaq 2.5%, and the Dow is not too far behind either. Now, just one more word on oil prices. There was some back and forth in the market on whether Trump wants to sanction Russian oil. There's no clarity on it. Marco Rubio said maybe there's something positive coming out of the talks. Then Mr. Trump himself said the talks have been good with Putin. So the market's very confused, the oil market. So the net result is it's range bound, not too much moving. About a 0.5% increase on oil prices this morning. So we'll wait by for that. Now, if you thought that this tariff, 100% tariff on chips, is going to sour sentiment in Asian markets, that's not what's happened. Asian markets also are a very, very green screen. The Hang Seng is up about 0.3%. The Japanese market is up almost 1%. So it's a good morning of trade across Asia. And as usual, we've been singled out. Let's see if today as well that trend continues. India is the only big market that's been falling for the last two sessions or not. Coming to the flows picture, this is where things are really, really rough. Again, we had a FPI sell number, 5,000 crores of selling yesterday. It's been offset by DI buying. Remember, Nilesh yesterday told us, Nilesh Shah of Kotak Mutual Fund, expect record mutual fund inflows, equity inflows in the month. And the data will come out in the next couple of days. So that's cushioning the impact. But the FPI selling is big. It's already 8,000 crores so far in August. And yesterday itself was a 5,000 crores sell number. In fact, that is the biggest concern. If you look at the sense on the street, and I'll give you just a case in point. Nuvama in its note mentioned this, that FPI selling, not just in those exporter stocks or some pharma names, but overall FPI selling could hit the mid-cap market really hard. So need to be on guard for that. And of course, the rupee is going to be in focus yesterday. It's not too far away from the all-time lows. It hit the all-time lows on Tuesday, which was 87.88. It pulled back a little bit yesterday. Let's see what the final implications is. And because of the rupee, I'll watch out for IT as well. Usually ends up being a bit of a safe haven in times like these. We'll see if that thesis plays out again or not. Nigel.
Well, that's right. Today the big question is, are we going to see peak of Trump's tantrum with regard to tariffs? That's going to be the important point because it's already at around 50%. If that's the case, the markets may start looking ahead because that uncertainty now is playing out. 25% has gone to around 50%. It can't get much worse from this, at least, going by what data we have. Well, moving to what's happened in the last 1 month or so. The India VIX, well, that one really hasn't popped up. And remember, we have seen the Nifty that's corrected, big time from the recent top. So Nifty is down close to around 1,100 points and the India VIX is still quite subdued. So that's telling you there is no big panic selling as of now, at least as of now. We'll have to see how the VIX moves, but at around 12 odd, well, that's very, very digestible from a bullish perspective. The Nifty is down 1,100 points. You have the Indian rupee as well that slipped, closer to the lowest levels that we've ever seen. So the market appears to have more or less been prepared for some kind of shocker that's going to be coming in from President Trump. Well, moving to the FI positioning as well, they as well seem to be prepared because after 3 months of buying, they sold in July. They sold 18,000 crores or thereabouts. And on the index futures, well, on the short side, they're holding at around 91.5%, which is the highest levels we have seen since March 2023. And what did they do yesterday? Well, they covered some mild shorts. They added, some short contracts on stock futures, which could be a bit of a hedge. But they're writing calls very, very aggressively. So short positioning in the index futures and you have calls that are written very, very aggressively. That's telling you that, in fact, the setup as it is very, very cautious from the FI perspective. We'll have to find some good news from somewhere. But otherwise, their positioning is pretty much, against the markets moving up. So we'll have to see some kind of positive surprise. Moving to yesterday's trading session, well, I said the FIs, they covered some short positioning. And it appeared, the Nifty Bank, after seeing a sharp correction, there was a bit of a short covering bounce that played in on the Nifty Bank. And that's why that was a relative outperformer yesterday. Moving to the options data, the PCR has come down to around 0.73, 0.74 in yesterday's trading session. Today, going by the opening, going by the uncertainty, at some point of time, we get below that 0.7 times. And that's when you see net short contracts, PCR sub 0.7. That's normally one of the cues that you see with regard to a short covering bounce. 24,600 call, 24,550 call, both of them added very, very aggressively yesterday. Aggressive call writing is what we saw. So going by the 24,600 call, we saw writing over there, premium is around 60 rupees. Today, remember, is the weekly expiry. That becomes the important resistance mark. But otherwise, your reference level, the 100 DMA, you don't want it to break. And I wouldn't be surprised, actually, at some point of time, because it's expiry day, because of the positioning, that we do see a big recovery from the low point of the day. The Nifty Bank, yes, it showed some signs that it wants to give up the recent underperformance. Well, it's pat in the middle of the 20 as well as the 100 DMA. You'll want it to defend this lower level. Let's see whether or not it's got more in store, because otherwise, in the last 5 to 6 trading sessions, this one has come in for a bit of a knock. So Q is a little bit subdued this morning, but since it's weekly expiry and going by positioning, we'll see some kind of a fight intraday from the bulls.
Okay, all right, got that point. So let's see if the bulls can indeed fight back. And absolutely, I mean, it's the worst. The worst of the news is now out. So does it get better from here? Let's see.